Dear students, welcome to my YouTube channel. In this video, we are going to discuss on residential status and the tax liability of the ASSESSE. Kindly watch the video till the end, like it, share among your friends and subscribe to the channel. And if you have any comments, please put your comments in the comment box. Now, let's move to the presentation here. So, first let us understand what is this residential status. Here residential status is nothing but the number of days of stay of the ASSESSE during the previous year in India. In a very simple words to say, it is the total number of days of stay of an ASSESSE in India during the previous year. That is nothing but what we call it as residential status. And such residential status is required for the purpose of computing the total income and determining the tax liability of an ASSESSE. And the tax liability of the ASSESSE varies according to the residential status of an ASSESSE here. So that's why there is a need of determining the residential status of an ASSESSE, and thereby it enables to compute the total income and determine the tax liability of an ASSESSE here. And the residential status is different from the citizenship. A citizen of India may be non-resident of, may not be resident of India here. So residential status, it depends upon the number of days of stay, and based on that the residential status of an ASSESSE can be determined. Whereas citizenship can be acquired either by birth or by getting married to a person or by applying for the citizenship. So the residential status and citizenship, they are totally different from each other. There is no any relation between the residential status and the citizenship of an ASSESSE here. Now let's move to the types of residential status here. So the residential status of the different ASSESSEs can be of these types: ordinarily resident, not ordinary resident, and non-resident. Here our focus of the study is only with respect to determining the residential status of an individual ASSESSE rather than the other ASSESSEs here. Now, in order to determine the residential status, there are separate rules for determining the residential status of an individual, Hindu undivided family, partnership firm, association of persons, and company here. Such conditions may be broadly classified into two categories, that is basic conditions and additional conditions. So now let us discuss the basic conditions here. So here basic condition 1 is that a person should stay in India during the previous year for a period of 182 days or more, then he will be satisfying the first basic condition. Here the number of days of stay of 182 days, a minimum of 182 days, need not be at a stretch. He may have a gap in between. So say for example in the month of April he may stay in India for a period of 30 days. Then again on 1st May he may fly to America and he may come back in September. Then so the total number of days of stay should be 182. So while counting the number of days of stay, here the date of arrival and the date of departure both should be included here. Then the second basic condition is that he has been in India for a period of at least 365 days during the 4 previous years preceding the relevant previous year, and should stay in India for a period of 60 days during the previous year. So it means that, say for example, assume that we are determining the residential status for the assessment year 2021. So the assessment year is 2020-21, whereas the previous year is 1920. So during the year 1920 he should stay for a period of 60 days, whereas 4 previous years preceding to the 1920, like 18, 19, 17, 18, 16, 17, 15, 16, in these 4 years his total number of days of stay should be 365 days here. There are certain exceptions to the second basic conditions. So now let us see the exceptions here. An individual who is a citizen of India and leaves India for the purpose of employment or as a member of crew of an Indian ship should stay in India for a minimum of 182 days instead of 60 days. So now let us analyze this condition here. An individual citizen of India. Here the person who was born in India, so he will be called as citizen of India. So an individual who is a citizen of India and leaves India for the purpose of employment. Suppose if an assessee goes in search of employment, or if he is going on employment or as a member of crew of Indian ship, should stay in India for a period of 182 days instead of 60 days as referred in the second basic condition. Remember, this exception is applicable only to the second basic condition. Then any citizen of India or a foreign national of Indian origin who is living outside India comes to India on a visit during the previous year should stay in India for a period of at least 182 days instead of 60 days. So here the question comes here, who is an Indian origin? Here Indian origin means either the assessee himself or his parents or his grandparents, including maternal as well as paternal grandparents, was born in undivided India. In such case, such person will be called as Indian origin. So even if a foreign any citizen of India, suppose say for example if the person is staying outside India, so but if he is of Indian origin, so who is living outside India comes to India on a visit during the previous years should stay in India for at least 182 days instead of 60 days. Say for example Indian origin, that means either he or his parents or grandparents might have born in undivided India, so such person will be called as Indian origin. You take for example now the forthcoming Vice President of US, Kamala Harris, she happens to be the Indian origin because her parents were born in India, so that's why she will be of Indian origin. Then here the condition you must notice here, the number of days of stay instead of 60 days it should be 182 days, and during that period they should earn income. In such case it is taxable here. So now let's move to the additional conditions here. An assessee should be a resident of India according to one of the basic conditions for at least 2 previous years out of 10 previous years preceding the relevant previous year. Suppose say in order to satisfy the additional condition here, an assessee should be a resident of India according to the one of the basic conditions. That means he should stay for a minimum period of 182 days, or he should stay in India for a period of 4 previous. He should stay in India for a period of 365 days during 4 previous years, and should stay in India for a period of 60 days, and even including the exceptions here. So here if an assessee who stays in India for a period of at least 2 previous years out of 10 previous years, then he will be satisfying the additional condition here. Then the second additional condition is that an assessee should be in India for at least 730 days in all during 7 previous years preceding the relevant previous year. So his stay should be in India. In order to satisfy the second additional condition, he must stay in India for a period of 730 days or more during 7 previous years preceding the relevant previous year. So then he will be satisfying the second additional condition here. Now let us go for determining the residential status of different types of assessees here. So an individual residential status may be of 3 types: ordinary resident, not ordinary resident, and non-resident. And please do remember that these 3 types they remain same for all the assessees. No, it is applicable only for the individual assessee and Hindu undivided family. Now let us look into the determination of the residential status in case of individual assessee. An individual, in order to be ordinarily resident of India, he should satisfy any one of the basic conditions and both the additional conditions. So always before determining the residential status, first of all the basic conditions to be applied. If any one of them, or if any one of them satisfies, that is enough. You need not go for checking of the applying of the both the additional conditions here. So any one of the basic conditions here. So if an individual, in order to be ordinarily resident of India, he should satisfy any one of the basic conditions and both the additional conditions. An assessee, in order to be an individual, in order to be not ordinary resident of India, he should satisfy any one of the basic conditions and one or none of the additional conditions. That means he may satisfy either first basic condition or he may satisfy the second basic condition, and he also satisfies one of the additional conditions, or else he may not satisfy any of the additional conditions but satisfies one of the basic conditions. Then in such case, his residential status will be not ordinarily resident here. Then the next one comes here, non-resident of India. So when an individual assessee fails to satisfy any one of the basic conditions, in such case he will be called as a non-resident of India, where the question of applying of additional conditions does not arise at all. So always, before determining the residential status of an individual assessee, so first should be applied only the basic conditions. So if he is satisfying any one of the basic conditions, then the additional conditions are to be applied, right? So if the basic conditions, if any one of the basic conditions itself is not satisfied, then there is no question of referring to additional conditions here. Now let's move to how the residential status will be determined in case of a Hindu undivided family. So more or less it remains same with the individual assessee also. Now let us see here. Even a HUF can be of three types of residential status, that is ordinary resident, not ordinary resident, and non-resident. Now let us see in case of ordinary resident. If the control and the management of its affairs is situated wholly or partly situated in India, and its karta satisfies both the additional conditions, in such case such HUF will be called as ordinary resident of India. Now let us discuss here control and management. That means if the decision making authority is vested in India either wholly or partly, in such case it is called as control and management of affairs is wholly or partly situated in India. For example, assume that if an HUF conducts 12 meetings, out of 12 meetings, if 8 meetings are conducted in India itself, that means it is the control and management of its affairs is wholly situated in India itself. And Karta should satisfy both the additional conditions. So here the additional conditions which were applicable for an individual assessee, the same will be applicable here. That means an assessee should be resident for 2 years out of 10 previous years preceding the relevant previous year, and an assessee should stay in India for a period of 730 days in all during 7 previous years preceding the relevant previous year. Then a HUF, in order to be not ordinary resident of India, if the control and the management of the affairs of HUF is wholly or partly situated in India and its karta does not satisfy both the additional conditions or satisfies any one of the additional conditions, in such case the status of the firm will be not ordinarily resident of India. Here karta is nothing but the head of the family. Then a HUF can be non-resident form of India when its control and management of its affairs is wholly or partly situated outside India. So though it is, say, it may having the branches in overseas. So say for example, if all the meetings take place outside India and all the decisions are made outside India, in such case it is called as a control and management of the affairs situated wholly or partly outside India here. In such case it will be non-resident firm. Now let's move to the determining the residential status of an association of persons or body of individuals, a partnership firm, and even the limited liability partnership. So it can enjoy only two types of residential status. One is resident and another one is non-resident. If the control and management of the partnership firm is wholly or partly situated in India, and in such case it is called as a resident firm here. If the control and management of the affairs of the partnership firm is situated wholly outside India, then it is called as a non-resident firm. Now let us see the residential status in case of a company assessee. A company can enjoy two types of residential status. One is a resident and another one is non-resident. In case of the resident here, it is an Indian company or control and management of affairs of the company is wholly or partly situated in India. That means an Indian company is one which is incorporated as per the provisions of the Companies Act of 2013. Such company will be called as an Indian company, and in always an Indian company will be a resident company itself. And then the control and the management of the affairs is wholly or partly situated in India. Suppose, say for example, if a foreign company which has registered in US, but it is having its office in Kolkata, or say for example Mumbai, and out of the 12 meetings, if it conducts 8 meetings in India, in such case a foreign company can also be a resident company. Then non-resident company, control and management of its affairs is wholly situated outside India. So such company will be called as non-resident company of India. Say for example, suppose if the company which is in US based, which is having branches in India, and it all conducts its meetings in US itself, but it operates in India. In such case, a foreign company will be called as non-resident company of India. Non-resident company of India. So a foreign company can be a resident of India, but an Indian company can be never be of non-resident company here. So now let's move to the next one here, the classification of income. The incomes are broadly classified into two categories, that is Indian income and foreign income. So the question comes here: Indian income, foreign income, exempt income, and past untaxed foreign income. So what is this Indian income here? Any income which is either received or the accrued or arised in India, such income is called as Indian income. So always here the first receipt of the income is most important than the second and the subsequent receipts here. So the term received means here receipt of income for the first time. The place of receipt shall be the place where it is received for the first time. Suppose, say for example, if rent is received for a property which is let out in Sri Lanka, in such case it is, though the source of income is outside India, but the income is received in India, so it becomes an Indian income. And such Indian income is taxable in the hands of ordinary resident, not ordinary resident, and non-resident here. So always we need to consider the first receipt of income. So say for example, if we take the same example here, if the rent on the house property which is situated in Sri Lanka is received there in the bank account and later on it is remitted to India, then it is not considered as the Indian income. So here the income, in order to be an Indian income, either the first receipt of the income or the source of income or the income accrued, it must be in India only. So then only it is considered as the Indian income, and such Indian income is taxable in the hands of ordinary resident, not non-resident, and non-resident. Now foreign income, if the source of income or accrual of income or the first receipt of income is outside India, then it is called as foreign income. And such a foreign income, the taxability of foreign income depends upon the source. Suppose, say for example, if the source of the foreign income is salary, rent, etc., in such case it is taxable only in the hands of ordinary resident. Suppose if the source of the income is from a business or profession, then if such a business or profession is being controlled from India, in such case the such income from business or profession which is controlled from India is taxable in the hands of ordinary resident and not ordinary resident. Suppose if the income from the business or profession which is not controlled from India, in such case it is taxable only in the hands of ordinary resident here. Then exempted incomes. So here these are the incomes which are not at all taxable in the hands of the assessee. And the section 10 of the Income Tax Act 1916, it provides number of incomes which are totally exempted under section 10 here. So for example, agricultural income from a land situated in India, or dividend received on the shares of the Indian company, etc. So all these are totally exempt here. Or income received on units of mutual fund under section 10 subsection 33. So all these such incomes are totally exempt from the tax here. Then past untaxed foreign income. Here this is the foreign income earned in the earlier previous years and which is brought into India during the previous year. such income is totally not taxable here, because it is the income which is relating to the earlier previous years which is brought now. Suppose, say for example, if any cricket player of Indian cricket player wants the man of the match and he opens an account and he deposits there and he remits the same thing in the subsequent years, then it is called as a past untaxed foreign income. So such a past untaxed foreign income, as it is the income which is related to the earlier previous years, so that's why it is not taxable here. So now let us discuss these things in detail here. So income received here, always I told you, always the first receipt of the income, if it is in India, then it is called as Indian income. So all the subsequent remittances are not to be considered here. Then income deemed to be received, so income which is not actually received but in the eyes of law it is considered as it is received. Suppose, say for example, when the transaction place, it will be recorded into the books of accounts, so that will lead to the receipt of the income. So such income is called as income deemed to be received. Then the next one comes here, income accrued or arising. So when there is a right to receive the income here, so that is called as income accrued or arised here. To income accrued or arising in India is Indian income and is taxable irrespective of the residential status here. When the right to receive becomes vested in the assessee, the income is said to accrue or arise in India. Then income deemed to accrue or arise means here incomes do not actually accrue or arise in India, but under section 9 of the Income Tax Act, there are some incomes which though do not accrue or arise in India are treated as having accrued or arisen in India. For example, say for example, income from salary chargeable under that salaries for services rendered in India. For example, pension from an Indian employer received outside India, dividend paid by an Indian company. So all these are the examples for the incomes do not actually accrue or arisen in India. So these things are to be considered while computing the tax liability of an assessee under different residential status here. So this table provides here the incidence of the tax liability of the assessee here. So any income which is received in India, already we have discussed what is income received here. So it is taxable in all the three cases here. Then income deemed to be received in India, so even it is taxable under all the residential statuses. Then income accrued or earned in India, which is also taxable in the hands of all the residential status. Income from business or profession which is controlled from India. Remember here this is foreign income, but here the source of income is income from business or profession which is controlled from India. So it is taxable only in the first two categories, that is under the hands of ordinary resident and not ordinary resident. Then income from business which is controlled outside India, it is taxable only in case of ordinary resident, and any past untaxed foreign income brought into India, it is not at all taxable here. So the type of the income is to be considered in order to determine the incidence of the tax liability here. So thank you for watching this video, and kindly share your feedback. Thank you.